What's up, everybody? Good morning. Are you ready to get this started? We're back from vacation. Ready to crush some more markets. Lots of stuff to talk about today. Market dynamics changing right under our feet, so we want to make sure we're on top of this. Come on in, champs. What's up, you guys? I am back. Oh, wait, hold on. Let me turn my light on. Woo. I still don't comb my hair before I come to work every morning. Ready to go in here. Gonna look at some monthly maps. You got a lot going on this market here. The yesterday's monthly map. Wait, hold on. Friday's monthly map. Still pretty bullish. Pretty bullish. Looking pretty all right. All right, let's get ready to get going. Let's do our morning routine, guys. Welcome. Oh, I'm here early today. What's up? Good morning, champs. Love y'all. What's up? Good morning, YouTube. Hit that like button. Friends in Zoom, go over to YouTube real quick. Make sure every morning, the free market. So continue the Zoom program. We got to keep growing on YouTube. That's our whole thing. So go over to YouTube real quick. Space. I'm book shopping. Found a $10 copy of Mary Shelley's Frankenstein. One of the best books ever. If you never read it, it's actually cool. Now I went to the bookstore and it was like $10. Like this, like animated, and the pages are all like burnt looking on the edge. It's pretty dope. Told the Bing she had to read it. She's never read it before. I've never read Frankenstein's a crazy book. It's not like what you think from like the movies and stuff. You think it's just like a monster running around destroying things. It's more like you feel sad for them, what they call the monster in the book. He's a good guy. He wishes he was human. He wishes he was like us. He questions his existence and questions why he's the way he is and wants to be like us. They treat him bad. Only down over here. What's up, Garrett? Good morning. All right. Garrett, you'll see me in chat offline. Some more statistics. We're starting to program some other things. I got some more data I want to get from you pretty soon. Okay. By the way, Elite Trader Funding, 50% off all evals, code Rocket Scooter. I don't think the code that they had, their Halloween sale, I think is over, so. You guys can still use our code. It's great. First thing we do every morning. Futures Dynamic. Go to Discord. Come in here, put the levels on your chart. D785. D729. Oh, wow. Okay. That's right on the edge right here, and 57.74. So that was a break in the overnight sesh. I'll see that. Okay. That's not the best sign in the world to see us lose this overnight. So be very cautious today. 57.74 is a key level in the S&P. I'm putting that in Discord. That's kind of like the big rocking point today for the market. What's up, friends? What's up, YouTube? Hit that like button, friends. Go ahead, give it some love. Good morning. What's up, Latoya? What's up, JX Bang Bulls? Good morning. Good morning. Good morning. Good morning. What's up, Arsh? Good morning. Okay. Dynamic next level here. Baby. 2123. So we're almost DD band float today on Nasdaq. 2123. So again, breach on Nasdaq. Similar risk. One, two, three. Yeah, so we're on the edge of both of them too. You guys know, let me teach you how this works. So you just tuning in here, we are a live trading group here. Created this trading platform you see in front of you. Most of us are in a Zoom call that's live. You guys here in the delayed YouTube stream, that's cool. Still love having you here. Good morning, good morning, good morning. Okay. It's good to be back. It's been like I was in New Orleans since Wednesday. It's fun. I usually travel so much, man. That's like my normal thing that I normally do. But since we made the marketplace, since we built Rocket Suiter platform, since we did, we've done so much in the last couple of years. It's not even funny how much I haven't really done anything related to traveling like I used to. Normally, guys, God, I'm all over. You know me. Y'all seen my Instagram. I travel the world. I throw lavish parties. Like you wouldn't even know. Huge events for New Year's. My birthday last year had 150 people. That's how big it was. This year, my birthday, low key. I don't have time. We've been building so much stuff. Saving money, like things like that is a big part of building two massive tech companies. So it's like, all right, this is like the year or two that we're going to kind of like dig deep and build out. The marketplace is fucking phenomenal. The platform, awesome. Getting huge upgrades now. We just scoped a bunch of new projects. Your overnights are going to be now automated on the chart. Excited for that. That project kicked off last week. Be more excited. So, I haven't been traveling that much this year. So this year I've just been kind of taking it easy. So I tagged along with a friend. A girlfriend. We went on a trip. This one. You lost your roles, even though you purchased lifetime. You have to reclaim them. I know it's Ed. You have to reclaim them. Why don't you try to reclaim your Discord role by leaving? Okay, let me send some messages. Let me send this. I'll help you out after the show. I promise. Just get with me. If not, actually, get with Slack. So he'll. Slack will hook you up if you need it now. We'll go with you after the stream. Your Discord while we're leaving the Discord server and joining. You just send him a DM in Discord. Hold on. Go to the Discord server. If you don't have your roles for whatever reason, go to the Discord server. Go to ask for help. There's a channel, and just be like @Slacks, and then he'll message you back. Welcome stream. What's up? 7 minutes till market opens. Let's get ready. Let's look at the pre-market stuff. Our normal pre-market spread here. This. Private markets open. Nothing really going on earlier this week. Some Fed speakers talking. Wednesday kind of light. Tuesday kind of light. Wednesday, minutes of meeting. So that'll be interesting. Right at the return of the afternoon, minutes of meeting. Gonna forecast the next meeting. Obviously, we know the FOMC is gonna be cutting rates. Expected 2 rate cuts by this year. We already had 150 basis points. The next one expected to be 50 basis points as well. The Fed fund futures are trading that way. Market's anticipating a rate cut to come, not in the next meeting, but the meeting after is my call. But I think they're going to pace it out. The majority, if you look at the dot plot, majority of Fed speakers, Fed committee members are in this boat that will be 1 to 2 points lower next year as well. So getting there. CPI, obviously Thursday, that's the big moving data point coming out this week. Other than that, looks like we're going to have a light week without a lot of news. And with that being said, structure's going to be maintained. So hopefully we don't get big old nasty sell-off markets with no catalyst. Holding monthly hedge pressures and things are what we hope to get going forward for the start of the day. That's good. Well, the hedge pressure, the key levels you want to see holding. All right, friends in Zoom. All right. We're going to watch the sector today. Big tech is it's kind of what our eyes need to be going forward. Tech is kind of what I believe is going to be carrying the markets. We need to see some improvements there. Nothing big on the earnings front. Obviously not earnings season yet. And then, of course, nothing in the news really. All the stuff we had last week kind of shocking the market. Still kind of creating effects, but nothing crazy yet. Market up is 2 minutes. Are you guys ready to do this? Let's go. Let's see what we have. Everything set up over here. Where's all my screens? You go here. You go here. Where do you go? You go here, maybe. You go there. Oh, no, you go over here. Your Discord. All right, guys, get ready to get going here. Market's opening 1 minute. 1 minute. We held the opening monthly hedge pressure here, 57.75 on the S&P. That's the key level to watch for this morning. 21.24 on the Nasdaq. So losing this is the okay, market's open. So this is the level we need to make sure we stay above for all long setups today. We get liquidity maps coming through. Here we got. Now today, obviously, I do want to stay long off of this level here. Let's see how the market plays out. Right to start. Watch for these opening candles to move down. Resiliences are opening right on par. Nasdaq is slightly negative. So let's see if these numbers stay positive. Let's buy really quick, right on liquidity map. Okay, here we go. Oh, here we go. All right, bulls on bottom on the SP. The problem is that the long side from here to here, there's just a limit. So this is not something I can take today. Here to the halfway point between there is the only trade setup that I do actually see. I don't know if I do want to take it. Already losing bull zone. Don't already like it. So from here to the middle, that is the trade that the trade setup here with negative resilience. We are below the box. So that's it. Market is stuck right here. Even any upside, there's really hard to see on the upside. This is an illiquidity pocket. So resilience goes positive. We can zoom to there, but that is a rare case, rare. So today, it's hard to say because we are kind of trapped. This is a trap. And I don't like what I see on this particular setup. So I didn't long out the open. We are kind of trapped in here. This is the leg from here right to the middle. That's it. This is the BSU setup at the bottom. Y'all know this. From the bottom of the bull zone right to the middle. And that's it. That's the leg. This is the only predictable part of today. As quick as that was only worth about 2 points, right? So we didn't touch this one today. All right, let's look at Nasdaq. Not tradable, and I'm not betting on downside, but we're going to be very cautious today, right? We do have monthly hedge pressure here on Nasdaq, so this is the one thing I do want to see. Problem is that when we interact with this, the S&P is going to be coming down and breaking its own levels. So be careful today. No good setups. There are no good setups today. Res less than 0, so no long setups, nothing here. Okay, so trapped here, consolidation lower, it's about it. So we do have pressure inside of here, but the problem is we're breaking key levels. It's so sad to see that the market's responding this way, so I don't like what I see. You guys on YouTube, don't forget to smash that like button, friends. Give us some love. All right. So being trapped in here, there really is nothing to take. And the problem is that even if there's any kind of upside movement, there's resistances the whole way up. Looking at Qs, it's kind of in the same boat, right? Mean reverting setups, press to the middle. That's basically all you have. Any break from here goes back to there and then back down to there. And this, again, is the rare case. The resilience numbers being negative, the market's going to want to stay here, expected. Expected high of day. Expected right here. So it looks like we are stuck here. Let me draw it with reds. It's easier. I can tell that. Waking up on a Monday. I hate when there's not like a lot of good stuff. Expected. I hate when I wake up not without a good setup, but that's okay, right? You can't. Not everybody can be like the best setup in the world. Expected push this way. And then there's expected support down here. So the problem is that the market is trying. Again, it's stuck in the bottom. Rare on the break. Obviously, kind of stuck in the middle. Let's watch VIX. Yep, take a look at that one. We'll look at big tech this morning. VIX and key level. Yep. So VIX breaking key hedge pressure levels. Yep. So the market's going to come down. Looks like downside. Downside's likely imminent now. Be careful. Usually a pivot. We hope that this holds. So this could support the market out. The market is structuring itself in a really weird setup. So unfortunately, there's no upside momentum today. It's not like, while monthly maps do showcase. Let's read this really quick. You're looking for the bottom of the bull zones. Looking solid. The top of the bear zones, however, crunching together. So bears are shorting more, bulls are longing more. The market is squeezing into a period of what we call consolidation, right? This wedging together. So the way that you're looking at this, and I'll show you the flashcard how you read this. So this is the monthly maps. This is our technology that everybody else in the world wishes they had. This is the best thing invented for modern retail traders. The best thing. This will project 3 months into the future. Market maker risk. Nobody does anything close to this. And let me show you what it does. It just reveals the positions. That's it. Okay, so let me show you something. Okay, and I'm going to show you guys how this works. I know I toot my own horn a little bit, but I've called major market pivots. I've called October month still continue to be bullish. We called major pivot October 22 bottom. We called major pivot December 2021 top using this one tool. You guys see my latest reel of how I made $33,000 in one day trading Nasdaq using monthly maps. Now, of course, individual results may vary, but I'm just reading the market. There's nothing crazy going on here. Okay, number one, where are we trading? Bull zone or bear zone? Number one, we are in a bull zone. It's checklist 1, 2, 3, and 4. We're going through these dark gray areas. This is the daily chart. We're in a bull zone. Number two, so we are in a bull setup. Number two, how's the market trading over time? Is the bull zone sloping down at the bottom or sloping up at the bottom? You can see it is sloping down at the bottom. Okay, so for the next 2 weeks, bull side is getting stronger. People are buying dips. That's all this means. So every dip's going to get bought, and we've seen that. Every dip has gotten bought. Every dip's gotten bought. Simple as that. Bear side sloping down or sloping up. As you see, the bear side is kind of like all over the place, so mostly sloping up. Means bears are shorting more, which is the problem. The bears are taking heavier bets right here. Now, again, this still means a liquid market. Bears are strengthening, bulls are strengthening. Everybody's pressing that market hard, both sides. There's a lot of people doubting the market from here. There's a lot more people buying the dip. And when the bears and bulls are liquid with each other, liquid markets don't crash. The sum of pressing together typically is up in general. Okay, so up and up. Number three. Oh, sorry, that was 2 and 3. Number 4 is how's the volatility. When the space between them is increasing, volatility is increasing. When the space between them is decreasing, volatility is decreasing. So volatility is sort of decreasing as well. We have volatility planned over the next week or so, which there's not a lot of things other than CPI, which is the big number everybody's waiting for, as the volatility is baked in. But other than that, volatility is collapsing. So monthly maps tell me on SPY right now that we are expecting the S&P to wedge towards itself. With lack of volatility in the CPI, and CPI is going to be a catalyst to push this one or the other. Market's going to be very uneventful for the next 2 days, maybe 3 days, leading up to CPI. That's it. The monthly maps showing us a consolidating market. That's it. And this is showing us 3 months out. So 3 months out, look, market's heavily bullish until October's expiration, and then bulls start to fade out and bears start to get stronger. So leading into the election, market's anticipating some volatility and some selling. So still likely bullish leading up to close out October. That's my guess. That is my guess. If QQQ's in the same boat here. And QQQ's in a similar boat, just stronger. So QQQ, not really seeing bull liquidation, seeing kind of bull strength from here going forward. Now it's still a little bit close to the price. We're still like barely in the bull zone, maybe 1, 2, 3, 4 days out, then we're back to being bullish. A little bit of bull liquidation leading into the closing as this is sloping up, bear strengthening. So a consolidating solid week, and then after CPI, depending on which way we go, the market is prepared to have some profit taking leading into the weeks of the election. Okay, so if I were to take a guess, I've been looking at the individual day today, but the S&P is probably bouncing around the slight upward tilt, but not going anywhere tremendously quick. And as we see, we're kind of slightly going up, like I just said, not going anywhere at the momentum. Boy, it's kind of easy to read this today. What do we do? What do we do? There's that bull zone press. This is it. This is the only predictable part of the day. The problem is that. So there's not a lot. Bull zone is always really strong support right here. This is always really strong support. When this number is greater than half, this number is great support. Okay. It does not want to break. The problem is when this number is less than half, this is resistance. Another thing is, in general, this liquidity map is somewhat bullish. We are somewhat trapped inside of here. It's about a 10-point range. Illiquidity pocket as well, which means the market will move rapidly between them with no consolidation. It'll move pretty quick. With only 10 points of possible move, we see this and we go, not really much we can do. Yeah, right. There's not a lot you can predict. Even if you get some kind of momentum to go through here, we don't have an event or catalyst today. There's nothing really here to propel the market forward, right? So I wake up, I see this, and I go, hey, let me take the day off. Let me go do something fun or chill today. Okay. Let's run the tech stocks and see what we got. Nvidia's just crushing today. I obviously saw that today. On really opening up enemy chart sitting on the side. You need to be watching tech on the side. Nvidia strengthening. Bull side strengthening, bear side strengthening. If you guys don't have monthly maps, I'm telling you. Ever since I started using this indicator, it's like just like I said. You want to impress your friends with what you know? Nvidia. Bulls longing more. Bears exiting position. Nvidia short squeeze. Short squeeze is parabolic. Here it is. Nvidia's not selling off from here. This shit's as strong as it can be. There's volatility, like everything else, leading into the election. Remember last year, or last time, there was a Donald Trump election. I don't know if you guys were trading. I was there that day watching the whole night. We were streaming most of it. What happened during the Trump election was the S&P collapsed and hit the overnight circuit breaker. 5% at the time. Sparked on a couple of times. And then rallied. And never looked back for, I don't know, 8 years. So the market, that particular day, if you guys remember the election day, like the daily range was like this. I remember it was like kind of like sparking around like this. And all of a sudden the candle was like that. This is a green candle. She goes blop, blop. So, people remember volatility. Now, the Biden election still was pretty big on the market, but it wasn't as crazy as the Trump election or Trump victory was. Let me show you guys some quickie facts. Okay, let's do some election day. These are all my old yellow lines and red lines. Put a blank chart here. Okay, so let's talk about election day, right? Let me show you what these days look like. So we're gonna go all the way back to 2020, which is here. Where was it? There's COVID. There you go. Here's election day this day. Market goes. So this is the S&P, right? So 35.20 to 36.60. So 140 points to the upside. Right back down to where it started. It's crazy, right? So elections are extremely volatile. In the overnight session, you have circuit breakers that go both ways. So let's look at the 2016. Show you that one. I remember trading that day. Here it is. Let's say right here. Look at this. Market been selling off, and then kind of trading up into it. Then all of a sudden, oh yeah, the wick was longer than I drew, but the wick basically encompassed months of trading, and then went right back up. This day was incredible. Now again, this is only 2020, 2130, so about 5%, right? Hit the 5% circuit breaker, which is exactly 5% to the math, and then popped right back up. So, people are a little wary. Election day presents a little bit of volatility, and the market's always prepared for that, right? Like I said, my call right now is the S&P is probably going to be trading down. Nasdaq likely trading down. I'm talking about this in the Discord. Not taking any longs here. Look how smart we are. Not getting tricked. Not getting tricked on this. Meta, where I think is the shining star. I think people are underestimating Meta. All eyes have kind of been on Nvidia and stuff. I think Meta is where my vote has been all year. There's some big growth is going to be. Here. Bull strong, bear strong, looking solid there. Google, I think, is muted in my opinion. Google is not the strongest, and neither is Apple. But yeah, I think big things come out of Nvidia and Meta. That's where the growth is this year. Google's still solid. Bear's liquidating. So Google might be the undervalued play. Maybe Meta's already kind of extended its run, but Google's still strong. Again, how you read these monthly maps, I'll walk you through that. Do the liquidity map real quick. Apple's balanced today. Same thing. It's like strong into expiration, and then there's a little bit of volatility leading into the election. So Apple looking good too. Not really too scared of this market. Yep. Clinton was favored 9-1 in the election. Yeah, that's what caused it. That's what caused those odds. Clinton was Hillary was projected to win, and Trump was definitely the upsetting condition, according to Wall Street. But in general, you know, and Biden was the upsetting condition as well, because people thought Trump was going to win again. And then, of course, you know, as I remember that election, we were waiting up until the last minute. There were like a couple states left, right? The market was just, it was that Biden election day was crazy, but it wasn't as crazy as Trump day. Trump day, the market completely collapsed. Hit that circuit breaker. And downside circuit breakers are fun. Like, if you ever seen one happen in real time. I've traded, I've been trading for 14 years. Okay, I've seen circuit breakers. I've seen circuit breakers in COVID. I've seen circuit breakers in the flash crash. I've seen circuit breakers during elections. They are interesting to see, especially downside circuit breakers in futures in the overnight. What's neat about them is, so in equities trading, the circuit breaker happens is that whenever you hit a key level, trading actually stops, and it will stop for a fixed period of time. Then they gap the market to a certain level, and then trading will resume. It's mandatory to stop trading, no matter what. In futures, though, when circuit breakers are hit, trading doesn't stop. Trading is still active, but it's only allowed to be traded on one side, and the overnight session is pretty cool. So the way that it looks like, again, there's nothing going on today. I don't see any trades to take, so I'm just watching. Nothing really worth taking today. The downside circuit breaker, you fall to the level, and then it triggers. What happens at this is the trigger in the overnight. You'll start to see that if this is the bid and the ask, for example, you will start to see like the orders pile up. This might say like 2,000 or 20,045. And this one might say like, you know, I don't know if it says, actually says 0. Probably it'll have some limit orders. Maybe, well, I have some limit orders there. But you will see like an absurd amount of selling against the buying. Now, market orders cannot go this way. You cannot sell any further. But market orders can go this way to buy. So imagine this is like a running balance. And people... What happened to my... Zoom just crashed. Oh my goodness. Oh, anyways. Yeah, we're back. All right, so that was my drawing. On the internet. So you'll normally see... I wonder if people that are in YouTube can see. YouTube, can you see like my drawings when I'm using the Zoom tool? Can y'all see this? Yeah, I guess you can. Okay. So what happens is neat is that the market falls, sits at level, right? It sits there. And then no trading takes place except for the occasional people that buy. If the bid was like 10, and the ask was like 20,000 contracts, it's a massive difference. You'll see time go by with nothing changing. And all of a sudden, as soon as orders are taking place, you'll still see volume at the bottom of the chart. But the volume is just eating into this, right? 1,000 turns this to 19,000. If somebody buys 100, it's 18,900. And this will still continue to fluctuate until it's all bought up and goes to zero. As soon as this tier is bought up and the next tier is starting to trade again, right? Then you'll see like a little spark of life. And then, of course, the selling typically continues, right? So as people are starting to eat into what's the ask price, you'll start to see like your actual chart just freezes and then humps and then humps and then humps. And as soon as the selling's over, then the bid and ask is normal. And then trading typically resumes a little bit. And if the selling continues, each time you hit that level, it shuts off on the one side again. You can't sell to the bid anymore. So it's really fun to watch. One thing you don't ever want to do when you're close to a circuit breaker, though, is be long any kind of position, especially when the market's open. You could take a bet overnight to buy here, but you are stuck in that position. If you long here, you can't exit that trade because you cannot sell that position below that level. And you're in the mercy of holding on to that all night until the equities market opens when circuit breakers extend a little lengthier. There's a little bit more room on that. But I'm going to tell you something. When you get even within 1% or 2% of that circuit breaker level, don't trade it. Don't even get close. Don't even touch it. The price spanning limits, circuit breaker limits are, the overnight has extended, by the way, and I don't know when the CME group changed this, but back in the day it was 5% up or down. Right now it's 7%. I just double checked. The CME changed that at some point, probably during COVID, or in that era they changed it. So it used to be if you're up or down 5%, that circuit breaker would apply both the buy and sell side. On the overnight session, now it's 7%, and then in the daytime, it's just 7, 13, and 20%. When we get close to, that's between 9:30 and 4, trading will halt for 15 minutes, and only to the downside. So circuit breakers are bidirectional in overnight markets, and they're only one direction in equities markets. The market can rally as much as you're willing to buy. The S&P can go up 10 million%. It'll keep going. And then at the 20%, the market stops trading for the day. Also, in the last 5 minutes of the trading day, if level 1 or level 2 circuit breakers happen in the last 5 minutes, trading doesn't halt. So 325 or later, market will still trade and collapse as far as it goes up to 20%. Anthony, I didn't long. No, I didn't long because it's pretty simple to see why I didn't long. Let me show you guys really quick. Look at CL. You can see this pretty simple. There was no long setup today. We fucking nailed it. So easy to see this. All right. We always know that bull zone goes to the halfway point between bull zone and hedge pressure. That's it. That's the only predictable part of today. That's it. Okay. The strength is here because DD is greater than half. Check. There was strength. Resilience has been negative all morning, so we know that this is the high of the day resistance, right? So market is stuck inside of here. This is also an illiquidity pocket, so market can move pretty rapidly. The best I can hope for is a hedge pressure break to go through here. With resilience being negative, we don't predict hedge pressure break at all. Hedge pressure itself is going to be hard to crack through. So because that limits today's setup to probably there is no trade. There's nothing to take. ES is at monthly hedge pressure now on the future side. This is the place to long from if you are a bull on this market, don't want to bet on some stability. This is the place to long from. This is the place. We can try a little bit. We can just maybe... I don't know if we should take one. What do y'all think? Problem is there's nowhere for it to go. That's kind of where I'm sitting on. It's like there's nowhere for it to go. And inside of here, this has just got all kind of resistances as well. Nasdaq has resistance there, there's bear zone resistance there. I mean, it's just there's no pathway to the upside. Downward resistances, right? This is res, this is bear zone. So no matter what it does, it's gonna have a hard time moving out of there. There's some trading inside of this range, but again, there's not a lot of travel. Right? Follow the process. The process just says there's not a lot. There's not enough movement potential for me to get there. No event today, no news today, nothing that's really going to give me any kind of faith in this market. Now, it doesn't mean I'm going to try to short this. This is a liquidity pocket. This is very liquid here. Market is balanced inside of there. That's going to find a move. Now, traditionally, in these kind of markets, this kind of setup, there's resistance there, as we already talked about. Resistance there, support there. Right? Market is kind of trapped inside of here as well. Inside the middle of this range, one of my favorite setups to do is to take the long from here to there if it does happen. There's that monthly hedge pressure support. I had my finger on the button, but I didn't pull the trigger. I'm not betting against this market, so I'm not shorting it. But with limited upside, it's kind of hard to take a long from here. What I like to do is I like to take this long from here to there to just span against the liquidity pocket from bear zone to bull. Like if we lose bull zone, come to here for whatever reason, this number being that strong, there's a pathway from here to here. So I need to get a little bit more run to take some risk. I want to at least get 10 points on this trade. See right here, it's been like up or down 5 or 6 points. It's not worth touching, right? So like we can see that from a mile away, right? That's why you guys turn rocks here. We look for like, can we draw the path out? Liquidity map over here is telling me oh hell, I don't like this one at all. I'm still a little groggy coming back from a little bit of a New Orleans trip. That was really fun. Had a good time. I haven't, like I said, I used to travel all the time. You guys, like I was talking about pre-market, you know, you guys hang out with me before. Y'all have seen my life, my lifestyle. Dude, I travel all over the place, all over the world. I throw lavish parties. I go to lavish parties. Like I do Gatsby level stuff. I mean, I enjoy living. But last couple of years, I've been kind of like a recluse. I've been not spending money, not throwing huge parties, not going to. I've been doing much. Maybe like winter time, I go to galas and stuff. But like lately, I've been doing nothing. I haven't taken a trip since like January. It's been crazy. Like a trip. I've taken a couple road trips, I guess. But like, I think the last time I got on a plane was like last January. I've been building Rocket Scooter. I've been building Rocket Place. This has been like my whole life. So it's cool to finally take like a little bit of a vacation. I had some fun. Went to New Orleans. Sang karaoke. Got wasted. One night I was completely sober, which is interesting. First time I ever go to New Orleans. Spent all night on Bourbon Street sober. Probably because I'm getting old, but no, I had a really good time. I go there. I love to eat. I love to walk around. I like to just experience the shop. You know, it's kind of like tradition for us to go. That's kind of like our place. We go to the Davenport Lounge at the Ritz. Listen to jazz music. So that's kind of fun. I got back last night. Can I tell you something cool? Last year for my birthday. My birthday was a 3-stage thing. My friends are so cool. I didn't set it up. I didn't pay for it. They surprised me. My friends are awesome. So one of my friends is part owner of the biggest club in Houston. We all went to dinner. There's like 25 of us at dinner. Big table. It was fun. All my closest friends. And then my buddy was like surprising me because my birthday's in a couple weeks, by the way. And he was like, he goes, yo, bro. He's like, I got a surprise for you. He's like, meet me outside after this. He's like, after this. I was like, all right, okay. He came, put the bill down, put the table. You know, I'm reaching for it. My friend's like, fight me out. He's like, no. He's like, no, bro, that's on me. It's like, no. It's like, no. It's like, no, it's okay. No, he's like, no, it's on me. He's like, all night. He's like, the whole night is on me. We already talked about it behind your back. He's like, you're in for a ride. Just have some fun. It's like, okay. Appreciate it. You didn't have to do that, but thank you. Walk outside. A brand new Ferrari drives up. Like, I'm talking like brand spanking new. And I was like, you got me. I was like, is that my surprise? It's like, you give me a Ferrari. He's like, no. He's like, I got me a Ferrari. I was like, don't you already have like 2 of them? He's like, yeah, but I wanted this one. I like this color. This one's better. I was like, you walked me outside for a surprise. And I was like, bro, I'll take the Ferrari. I don't care what else you get me. I can take the Ferrari. He was laughing. He's like, no, let me tell you something I got you. He's like, hop in. So he took me for a joyride in his brand new car. This is my birthday last year. Apparently they'd organized this with all my friends. I didn't even know. I was like, what about everybody else? He's like, we already took care of it. Don't worry. They all know what to do. So one of my friends rented out half of an entire club, the biggest club in Houston, like for me, for my friends and stuff, and invited 150 people. I didn't even know half these people, believe it or not. But friends of friends of friends of friends all started showing up. But invited everybody we knew, and they did a huge surprise party. It was crazy. So that's like you know, I usually live up. I live it pretty good. It was humongous. People had like my face on sticks and were like, Matt. And like, you know, I don't normally do that, but that was crazy. I don't normally do like huge club thing like that, but that was actually kind of crazy. It was fun. It's interesting. So like, you know, but ever since I started building Rocket Place, I've just been kind of like focused. I don't really do much anymore, which I love. I want low-key life now. I'm just like, I gotta work. I gotta build. I'm building like the next biggest thing for finance. I need to focus and work. And I have been. Like last 2-3 years, I've been really doing much. You haven't seen me do many trips. Other than my birthday or New Year's or something, I haven't really been doing like big events. I'm the most boring trader in the world. I promise. So, I told my girlfriend the show, I was like, I want something that's unique and different. She's like, you want a big party? You mean tell your friends again? No. I don't want that for my birthday. Big dinner? No. We'll save money. I'm growing up. I'm like, the days of like, you know, popping champagne bottles and stuff. I'm like, as fun as it is in your youth. I'm thinking like, I'm gonna get a house. We're gonna build this tech company. We gotta be good this year. So, guess what we're doing for my birthday? And I'm more excited about this than I was about the huge party I had last year. He found a wildlife reserve, and then y'all are gonna laugh because they're gonna be like, "What the fuck is he talking about?" They found a wildlife reserve, right? That you can swim with otters, which is like my favorite animal. I've like had this dream since I was a kid to swim with otters or have like I always wanted to have an animal sanctuary when I was a kid. Number one, that was like my dream to grow up and have an animal sanctuary. But I love otters. For some reason, I just think they're awesome. They're cute. They're like little. It's like a little cat dog mixed with a rat. It's like half rat, half cat dog. There's a little cute little face when you watch it like eat a fish. It's like and like they like look so cute and they got blood all over their face. It's like cute and vicious at the same time. Like how can you not love otters, right? So taking me to this cool sanctuary where you get to like swim with otters for my birthday. So much of my friends are probably gonna go and do something low key. So that's what I'm doing for my birthday this year. I'm super pumped. I get crawfish from Three-Legged Dog. No, I didn't get crawfish. They're out of season, so I got crawfish topping. Like everything I ordered came with crawfish though in New Orleans. That's for sure. Drunk chili dog from Lucky's. Oh yeah. Didn't do that though. Fellow Libra, yogurt's a Libra. Awesome, dude. MSTR doesn't have liquidity map. Otters are awesome. Sometimes there won't be liquidity maps if you've never asked for it before, or because our algorithm only pulls data from things you actually have typed in before. So check again tomorrow. It might not just be on the list, or like essentially because there's just an infinite number of ticker possibilities. The list only calls data for what you guys have ever asked before. Or there's just not enough data to trigger the calculation to be appropriate. So like if there's only like a couple of options, right? We don't try to create a liquidity map when there isn't one. There are threshold tolerances that are in the coding itself. So liquidity map not only has to be present with options, it has to be deemed worthy of display. So we have an algorithm that after liquidity map is calculated that decides to throw it out or not. There's another thing I created was that it's an integrity check. There's a checklist of things it must look for to ensure liquidity maps. Like if you have 2 options and 1 option, the liquidity map can say this is very bearish, but like there's only 3 options, right? The liquidity is very low and there's not enough to make a determination. It would usually throw it out. It has to have a substantial amount of data and data spread and data clumping, if you may, should showcase the liquidity map. So it has to basically be like a sea of options with islands of risk to really trigger it. So illiquid things that sometimes don't trigger it as well. And it's better to have no liquidity map than a bad one. That makes sense, Justin? So a lot of times, so we made sure to do that because illiquid stocks is, oh, here's MHP, I got to trade off of this. But it's like, it wasn't enough there wasn't enough to really have us have a lot of faith in that because the market is too thin for that to really be a liquidity map. So promise, when we get a liquidity map drawn for SPY, it's telling you that the market is liquid enough to give us a good solid calculation where bull zones will bounce and bear zones will resist, right? Bull zone bouncing today where this arrow is drawn. Has a very liquid options chain. Yeah, it does. So it's likely that it just wasn't on the list. So that's option number 2. So we run a dynamic list that has something similar to the Reddit algorithm, in which that when you search for something, it gains popularity points like an upvote. If you don't search for something over time, it starts to kind of decay, kind of like Reddit's algorithm. So like the number of upvotes something gets decays over time. And so the list is dynamic like that. And that if everybody's looking at GameStop today, GameStop's going to move its way to the top of the list. And we sequentially pull this data from the options database that we have. So like we pull in all the options data real time. And then we query the database to get the data to run liquidity maps. And we run them sequentially. We have 50 threads. So 5 computers with 10 threads each running full time to calculate liquidity maps. So we can do 50 parallel calculations at once. Allows us to get through the majority of S&P and Nasdaq stocks, typically within 30 seconds to a minute. So, you know, it'll take 1 minute, 2 minutes, 3 minutes to get to the end of the list. And so the way the list is ranked is dynamic like that. So I wrote it that way, such that like when GameStop is hot, we'll pull that data first so that you have it quicker. Something that's not hot, we pull the data last in the chain of 50. Now that's kind of the balance we did, you know, cost versus application. We found out the majority of you, which we watch what you know, bulk data, what everybody looks for. The majority of all traders only really look for like 30 stock symbols. It's weird. Let me teach you something about traders. I have data. I have market data on what you guys look for. The majority of traders only look at about 30 different symbols. Do you know that? About 2/3 of the S&P, all of you have never looked at once. Did you know that? Cool data. Cool data point to have. Like 2/3. Yeah, I know. Despite me talking about like bottle service, pop champagne, driving off Ferrari stuff, I'm actually a serious mathematician, by the way. I think it was the coolest guy in the math club, but seriously though, I'm a data miner. I love this stuff. 2/3 of you have never looked at liquidity maps. The majority of you, sorry. There's a huge chunk of the S&P that you guys never even touch. Matt, how come I don't trade more of the popular futures instruments? Which ones? Frank Underwood says, how do you add a ticker to that list? Which one? Down here? Watch list, you add a ticker just by typing the symbol and hitting enter. Risk interval DD, you go to the bottom. Oh, mine's off the screen. But there's a little entry field down here at the bottom. You can't see because of this, like, learn to trade, blah, 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 blah. There's a little symbol. You can come here and enter in something here. CLGCYM. So, number one, when you have the option to trade the S&P, never choose YM over the S&P. There's no reason to trade. The Dow Jones he needs to retire. The Dow Jones is a useless instrument because it does not reflect. So the reason you trade the S&P over anything else, if you were to choose the S&P, is because of how diversified the index is. So to see that the stock market is going up or down, you want to see money moving to shares, like people converting money into owning shares. For the stock market to go down, you need to be people selling shares and going to cash. The Nasdaq, let's just start at the transparency there. The Nasdaq doesn't allow you to see what's going on in the energy and financial markets, right? So the Nasdaq going up or down is not a reflection of people's fear and panic in the market. If the Nasdaq is collapsing, it just means people are selling stocks. But if financials are rallying twice as fast, confidence is there in the bull market. Nasdaq will never reveal a true bull or bear market to you. So throw it out. Nasdaq's just a fun toy that moves faster than the S&P. The kids like to trade because the gains look bigger in their paper accounts and their funded programs. But any smart day trader would understand that if you want to trade something that is stable, easier to read, and more reflective of the actual market, the S&P is the only way to go. Now you have the Dow Jones is a similar thing. It's a diversified index, but only has 30 stocks. So it doesn't really showcase, it doesn't adapt much easily to represent the biggest movers of the market. Now the problem with the S&P is that it's market cap weighted. So certain stocks can move it faster. But in general, the Dow Jones could be collapsing for a day while the S&P could still be rallying if just those particular stocks are doing bad. And around earnings season, that's when you start to see this. If you have like big earnings day and like or big earnings week, and maybe like a third of the Nasdaq or Dow Jones stocks might be in that week, the Dow Jones will have a lot more volatility than the S&P likely would. So I choose the S&P over Dow because it just has more stuff. More stuff means more robust. As a scientist and mathematician, right? More data is better. So I choose S&P over Dow. Now, why I don't trade gold or oil is I used to trade oil. I was an oil trader when I first started my trading career. I was an oil trader for 4 years? 5 years? Well, let me start over. When I started trading stocks in 2010, I was trading part-time. This is getting my footing in the ground. When I started trading full-time around 2015, I was already trading oil. And I was trading oil companies at the time, and then I switched to trading oil futures. And I did that for a very long time. And I learned everything there was to know about oil. And the only reason I don't trade oil anymore, or gold anymore, is because the commodities market requires a lot more homework than you think. Especially with oil. Example, oil is a single item. It has no buffering. A direct news effect on we're going to cut oil production, then all of oil changes. Cutting production, price is going to surge. But in the S&P, right, if Apple says we're cutting production, right, then you might say, oh, that's bad for the company and Apple's going to sell. But the whole S&P isn't tanking because there's 499 other companies there to absorb that news. So an index has more buffering for what I call like single serving catalysts or single effect catalysts, where it's just like one person says one thing about that entire thing. Now we have a few catalysts like that in index trading. Is Jay Powell, right? He's that one moving effect that can move everything at once. CPI and GDP, some of these data points can do that too. But those are usually on the calendar. You can see those coming from a mile away. The S&P almost never, and I repeat, almost never has a surprise news event that moves the market. Start there, PJ. The S&P is scripted. Almost every single major catalyst or major news event that happens in the S&P, you wait for it. Oh, today's this day, this week, CPI, right? Now, when Donald Trump was president, it's a different story. Donald Trump's Twitter was your surprise catalyst, which made the S&P really hard to trade. Because every other day we were in a trade war with China. And then the other day it's like, hey, we worked it out. Oh, no, we're back on. Okay, now we're back off. And the market was like, hated hearing that, right? But in general, especially in Biden era trading, Biden, I don't think the White House Twitter account has ever moved the market once. And Trump used to move it multiple times a month, if not sometimes multiple times a week. Depends on the era you live in. But in general, when it comes to oil, oil has random surprise catalysts appear all the time. Production here, fire at a plant here. War between these two oil-producing countries. This one attacked this one. This one attacked this one. This one blockaded ports. And the problem is the majority of oil production takes place on the other side of the world when you're sleeping. So you have to pay attention to the catalyst 24/7. You can't hold oil assets overnight and not go out and hedge in futures because who knows what country here and country here are going to be throwing bombs at each other one night. The problem is that you are awake 24/7 or you have alarms going off all the time. And oil becomes really hard to trade and very susceptible to those single event or single serving catalysts where, I don't know, Saudi prince can wake up and decide, I just want to, the crown prince can, I feel like doing this and can say something and someone can tweet something. Let's just cut production. Why not? We decided last night we're going to do it. And all of a sudden, your oil just goes the other way with something you couldn't forecast. It's much harder to trade commodities, especially when they're global and have global impact all around the world. Gold is the same way, and gold is very susceptible to a lot of the supply and demand of gold, which does not happen here in the United States as much. So you're basically forced to be awake all the time. God, when I was trading oil, I mean, how many times I'm up at 3 o'clock in the morning for the OPEC, the meetings, the big conferences they'd have, where all the heads would get together and release the report and talk about what the production's going to be and stuff. I just get tired of it. Basically why. So commodities are less predictable than the index because the index has buffering. The index goes up in the United States because of mostly United States traders. There's a lot of people that trade from overseas, but majority of the longing in the market is typically people's 401ks and stuff. So as long as we have a steady employment rate, the market's going to be more predictable. The index market's more predictable. But commodities themselves are very susceptible to supply and demand of the entities that you don't necessarily interact with on a daily basis. Your ear's not to the ground. I don't go to Saudi Arabia. I don't know what it feels like over there. Anything related to currencies or gold, I don't know what's going on there. The euro against, the franc, like how can you trade a currency pair if you don't live in those countries? You don't experience the inflation in Germany. How would you know how the currency is going to trade, right? In the United States, we experience the inflation here. So I can say, okay, my dollar's stretching further. Let me bet against it or whatever. When it comes to supply and demand of global commodities, you have to do a lot of research to kind of feel it out. Because here, we all can kind of just fill out the American index. It's all contained here. And so all your news takes place between 9 and 4. Once I realized that, it became a whole lot easier to manage trades because honestly, the S&P is magnitudes more predictable than oil ever was. Never will be. That makes sense, PJ? Great question. That's why a lot of professional traders move towards that because it's a lot more predictable. With S&P, with index, all you're monitoring is people flowing money to cash, to stocks, to fixed income. Back and forth. There's only 3 places for it to go. And commodities are something people utilize as part of their basket and part of their hedging, but it's a whole different dynamic when it comes to commodities. You got to kind of be monitoring what's going on all over the place. So oil, right? You need to pay attention to the geopolitics of Russia, geopolitics of China. China needs a lot of oil. Russia produces a lot of oil. You got to pay attention to every country in the Middle East. And half of them hate each other. And they're beefing all the time. So they're always one-upping each other, trying to do this, trying to do that. And so it's like, you're like married Yeah, and I'm obsessed with oil, by the way. I love, because I was an engineer. I love the oil market. I love the story that oil tells. I could tell some pretty cool stories about how oil is traded and some of the cool power plays some of these countries have done. But it's great. It's fun, but it's like a 24/7 job, and you were always listening to stuff. Anytime a refinery, like a long time ago, there was this news, and again, there's a lot of corruption there too. Al Jazeera produced this this release, oil tanker struck by drone in whatever country. Oil did this, and then within like another day, it did this. And it wasn't really a drone. It wasn't a military drone. It was just a camera drone. Hell, it could have been a fucking wedding photographer, for all you know, bumping into the side of a tanker with a drone. Because the news came out, was like, oil tanker hit by drone. People were like, oh, trading it like as the war started. What's going on? And then it was like the next news report later on the night was like, well, no damage was done. And then later on the next day, they go, yeah, we found out it was a camera drone. It was a personal camera drone. Like, you know what I'm talking about? It's like shit like that made oil just unbearable to a degree that the S&P doesn't have stupidity like that. Drone hits tanker, right? The guy's like flying around filming a wedding in whatever country that was, right? So oil is very sensitive to news, and you have to be very careful. Plus, I don't believe that oil is really a growth asset anymore. I think that oil is kind of like itself kind of married to the level it's at and likely to go lower over time. It's mirroring an inflationary market. When there's high inflation, people invest in commodities. That's common. But in general, when you adjust for inflation over the last 200 years, the price of oil is relatively stuck at about $40. So for me, as an oil trader, seeing $70 and $80 oil over extended periods of time when there are not wars in the Middle East is very unusual. So believe it or not, this may seem normal to some of you newbie traders that just got into the game. Oil traders have been scratching their heads about this for years. There's no exuberant amount of demand for oil over the supply. There's no crazy amounts of production cuts like there were in 14 and 15. Or sorry, 16, 17, like after the oil surplus of 15. This is just an inflationary play. And there's no global demand growth for oil products. There's only so many third world countries that can modernize and need oil products. And as everyone modernizes, oil is just not a growth asset. The reason I know that is because the Saudis were dumping some of their assets and trying to get into finance where the money really is. You wouldn't be really doing that unless you didn't see oil as a $200-300 perch commodity. This oil is likely to sustain itself in our lifetime in this range right here and only grow at the rate of inflation. So I could say that I could see oil $50-60, forever, but that's just me. This, since 2020, is purely a reflection of inflation. When you have inflation and the stretching of your dollar, is not as good as it used to be, you tend to hoard things that do have natural demand. It's just it's a stockpiling thing. Like, if the world was going to go to shit, right? What good is a stock? What good is a fraction of a company? But you know what is good? Putting some gold bars under my bed, putting some barrels of oil in my backyard, right? Because at some point people will need that again. But will people need a meta? Will that even be a thing when we kill all the zombies and reset the world back to normal? So in periods of high inflation, people are unsure about the state of their currency. They tend to stockpile things that hold residual value, tangible things. So this is just an inflation play. EJ said we would be at 40-50 barrel if not for this Middle East mess. Well, the thing is, you trade oil long enough, and I trust me, I love the Middle East. I love all my friends from the Middle East. I love every country in the Middle East. I'm going to tell you, there's never been a period in my oil trading where someone in the Middle East wasn't beefing with someone in the Middle East. You're always going to have that as a dynamic in your oil trading. There's always some kind of beef going on between countries for many reasons. It's a hyper competitive world. It's very dependent on oil because that is the wealth of most of those nations. Another thing is you have secular and religious differences that also cause them to have trouble getting along, which all of that plays in the dynamic of trading oil. You have to understand
Like when I'm trading oil, I was very keen on the difference between Sunni and Shiite Islam. Like I knew things about the cultures in the area. Like you have to know everything, because when you hear people say this and this, you have to start piecing together, oh, it's this and it's this and it's that. So you have to kind of utilize things that you didn't think were related to oil prices. So interesting thing is that oil is just really hard to trade fundamentally, and the S&P is so easy to trade fundamentally. The catalysts are so easy to understand. You're looking at GDP, you're looking at credit, availability of credit, GDP growth, which is the amount of production versus the employment that we have. These are the major economic factors, and inflation, which kind of goes with all of that. So you really don't have a lot of extracurricular catalysts, like the one we had the other day with the port strike. That was an extracurricular. That's a catalyst that just appeared out of nowhere. When's the last time we've had like a random port strike? Right? Not as common. When I was trading oil, dude, those catalysts would be like once a week sometimes. It was crazy. This is wow, hearing all this amazing, all the facts. I think I traded oil for about 4 years. Oil futures 4 years, and I started my career trading oil futures. And it was just a crazy amount of information that you had to absorb all the time. And I just kind of got tired of trading overnight. When my friends were like, some of my friends were trading S&P and Nasdaq, and they're like, yeah, we moved to that because it's more stable. It's easier to predict. And they were just technical traders. So, but yeah, this is an unusual price for oil, but this is just inflation world prices. GLD will have the same effect, but gold will have more of a robustness to it, because gold in general, right now I think gold is the play for the longer haul. I could see GLD in the 400s over the next 5 years, but even so, inflation's starting to come down. You may see some profit taking on some of these tangible assets people are holding. But we're in a different world since COVID. I don't think gold has the ability to lose value anymore. I think people are kind of like timid these days. We live in a really weird world that can just shut down like this. We learned with COVID. So I think people are scared, and this rapid inflation that's been experienced around the world, people are scared. So I think gold's going to be the one thing that holds its value past, beyond the idea that CPI is going to likely be coming down this week, right? I think gold's still going up. That's just me though. Anyways, like I said, I tell you guys, today's a flat shit market going nowhere. I ain't touched the market today. Told you that resistance is there, support is there. I mean, that's what we do at Rockseer, man. Save your time, save your money. Don't fuck around with something that's boring. Don't go anywhere. And we tell you something cool about those OPEC meetings. So after the big crash, was it 2014, 2015? Right, so back in the day, let me tell you a story about oil. Let me tell you how I have mad respect for the Saudis. I consider them the greatest traders that have ever existed. They prove it through their understanding of how to dynamically manipulate the oil market. It's incredible. It's incredible the power plays they've pulled over the years. I should probably write a book on this stuff. It is so cool. Some of the things they've done playing chess. The world. Let me show you something. All right. So way back here, my timeline is going to be awful big. It's been a while. Way back here, right? This is what we call shale era oil, right? This was the 2008 run up. And then obviously oil had a pretty strong run up when we had the two Gulf Wars, right? We had Afghanistan and Iraq back here. Oil always goes up when there's a war, especially an occupied war with the United States. Oil will always go up. Because the United States and oil-producing countries love to go torch oil fields and block ports and cut off the oil supply because they know that is the funding for the other side. Remember Desert Storm in the early 90s? There were those famous photos in Kuwait of Saddam Hussein torching those oil fields. So anytime you can cut off the oil supply, you're going to see oil start to move. And there you go. There's early 90s. That's when that happens. So that's one thing. Back here, this was fun, right? All of this did was retrace half of that distance that sold off. But the break-even point of a lot of these shale basins where you can get like really like dirty oil that was hard to produce became profitable at this point because oil was valued so high. And China was entering the market of, stockpiling their strategic reserves. They were threatening to invade Taiwan, and they were also modernizing, right? China was, a rural country for the longest period of time. It still is, but areas of China were starting to modernize very rapidly. The taste for American cars were going up, or American style lifestyle, not just cars, but Americans had cars, houses, things like that. And so in this period, there was growth in China. And we still had a global export ban. We could only sell oil to Canada and Mexico at the time. But when Obama became president, he lifted the export ban. And so we would be allowed to sell oil to everyone else. The thing is that in China, they don't have environmental regulations like we do. We can sell them this dirty, crusty, nitrogen-rich oil and sulfur-rich oil to plants over there that were able to process it. The thing with oil is that you can't just pull dirty oil out of the ground. Anybody can process it. An oil refinery has to process a certain type of crude that is a certain range of impurities. It's not compatible. You can't just take any oil to any refinery. So the thing is that dirty U.S. oil, like up in North Dakota and things like that, way out past West Texas, there's actually a market for it, as it was rumored that Obama would lift the export ban. And so we grew the shale market, right, in our country. And because the Saudis heard about that, they decided to, once they knew we were going to lift the export ban, they decided to flood the market with supply because they play chess while we just play checkers. These guys are fucking brilliant. So back in the day, they were like, well, we want China to be our customer. Let's go ahead and flood the market. Let's crash the American market. And they did. They flooded the supply until oil went down to here. And right about here is when China started purchasing a lot of oil for its strategic reserves. So they kicked us out of the game before we were actually able, and this is a WTI crude. So our crude market reflected those prices. But you can see in the Brent price, the same thing. So essentially, they played chess. We lifted the export ban too late, and they were able to secure a lot of deals with China. It's great, right? So I tell you, they played chess. Right? They literally were like, well, no, we're gonna let America enter the market and sell crap crude to China. We're gonna sell ours to China. So they did, and that's the kind of stuff that you have to understand when you're trading oil. You can't just go in there and be like, is it moving out, just crossing over? You're gonna sound like a doofus to any professional. You see, when you're trading something like oil or gold, you become a geopolitical expert in that thing. I used to know it so well that, this has been like 10 years. I can still tell the story because you're so ingrained in it. So pretty cool, right? Now, these days, I don't follow the oil market anymore. So I'm kind of like, I don't know what you kids are reading these days in the news. But back in the day, it was like this. It's a chess game between all these countries. And back then, OPEC had a really strong foothold in the market. But they only, at the time, when I got out of oil, they only controlled about 30% of the supply. So it wasn't really that big. And then you had what was called the NOPEC, which was Russia and some other things. And now I think you have the BRICS, which is the new thing. Anywho. Yeah, monthly maps on SPY. So no real trading signals today. I don't think the market's going to do much. Probably till close of the day. So I'm going to probably sit out and do much. We covered monthly maps this morning. So I'll just show you. Let me get this to be sideways here. S&P is bullish. On the long side, bears are squeezing on the short side. So the S&P is just consolidating high. I don't think we're going to do much until maybe preload into CPI or rally or something's going to be on CPI. So I'm afraid that CPI is going to come out pretty decent. The market might pop and drop. This is kind of my thought because there is volatility in the market. You can see it pretty easily, right? The space between here is volatility. And we got CPI coming up in a couple of days. So while the market is consolidating, because you have your bear zone and bull zone pointing towards each other like that. See how they're pointing towards each other? Number one, consolidating. Number two, volatile leading into CPI. So the actual movement of the S&P is consolidating. and then volatile, which means we're going to break pretty soon. And I'm afraid that the CPI is going to predictably come out as being bullish, and the market's going to try to sell and at least fill this gap. But I don't think we do anything but rally from there. Well, the problem is leading into the election, you have a bunch of bull side liquidation in the S&P. So the market is looking to sell leading into the election. That's the scary part. Now, the last election where Trump was favored to win, remember, the market did this for like 3 months leading into the election, and then it crashed and rallied. So leading into this election, the market is strangely rallying. So it's going to be weird to see how this plays out. There's a lot of people planning for intense amounts of volatility. Look how crazy that is. That's huge. The space is volatility. And the election is here, right? Bears are shorting more. Bulls are getting out of the way. There's a clear bear inflection point here. That's a problem. So my thought is that we pop and drop on CPI. Then we basically do this into the election. That's my fear. And I think that like October is probably done. Here's this. We consolidate a little lower. Doesn't make sense to rally into this election. Not when Trump is favored to win. Trump is favored to win. We know the volatility of the market is just unstable. The Democratic election last time, where actually no, sorry, let me start over. Hillary was favored to win, and then Trump was the upset. Trump was favored to win, and Biden was the upset. So this time, I think Trump is favored to win, and I don't think it'd be an upset if he won. So I don't know if the market's going to be as volatile, but it's planning on some volatility, as we can see that. Oh, crazy to see. I'll tell you guys, if you guys are new to trading, if y'all only started trading since 2020, Trump era trading, it's a whole different type of game. It's different. You will wake up, you will have big moving days all the time. Like you will see, Trump likes to stir the pot with other countries, with trade, with things that matter to the economy. He stirs the pot. He was beefing with North Korea. He was beefing with China. All about trade and prices and embargoes and tariffs and all kind of stuff. So you got to listen to that all the time. Trump Twitter will be the first thing that you have on your screen. So QQQ is a little more dynamic, a little more stable. There's still an inflection point here and here. Do we all see that? So after this week, there is a clear bear inflection point going forward. Because you see the bottom of the bull zone and top of bear zone are sloping up. Right? So the price move is opposite to the direction of these zones. So the zones are pointing down, the market is bullish. The zones are pointing up, the market's bearish. So I think that the market's planning on pop and drop on CPI. CPI is going to come out good. Inflation is going to be slightly lower. I mean, that's the case. Hold on a second. Anywho, you guys, no trading for the rest of the day. I think I'm going to call it. I love y'all. I'm going to get out of here. Nothing else to do. So, see y'all later. Easy to predict the market's going nowhere, and the market went nowhere. That's how good we are. So don't forget to check out liquidity maps. Link in the description below. You can get them from the Rocket Place or the Rocket Scooter website. You can see what we do. All this stuff is available to you. Give it a try. We have Zoom calls, $20 a month. You can join them. It's $1 a day, and you can learn all these techniques. See, I woke up today and said, I'm not doing